Apparently, Tesla stock is already at $280 per share in Robinhood's 24-hour trading. I don't have access to this, but that's what I'm currently being told. Tesla stock, as you know, just reported another record delivery number, smashing all analyst expectations. Literally every single analyst was wrong. You guys did much better than analysts trying to forecast Tesla deliveries. But they are going to be the same individuals to come out and be super bearish on Tesla coming tomorrow. Does that affect Tesla's share price? Probably not. Tesla stock's going higher from here. If Tesla doesn't break out above $300 per share, something is wrong. That's the bottom line. But here in this video, I want to get into some more analyst commentary, including from Barron's, Business Insider, Gene Munster, and Dan Ives. They all are commenting on this Tesla delivery number. And it just fucking crushed the bear thesis. So let's go ahead and get into it. On top of that, we are going to get into Tesla's solar and energy storage business as well, which we haven't really commented on too much here on this channel, and with the main focus on margins for this upcoming quarter. Delivery numbers are great, but the next big worry could potentially be margins. So let's go ahead and get into all of that information. If this is your first time to the channel and you like to make money, you want to make more money, and you want to reach financial freedom as quickly as possible, or just stay up to date with everything happening in the markets as well as with Tesla stock, hit the subscribe button, hit the like button as well. Wall Street was looking for deliveries of 445,000 to 447,000. This is only a 4 or 5% beat. They go on to reference the difference between production and deliveries. Production was 479,700 vehicles. And the gap between what was actually delivered is 13,560. They say that's a small negative. Still, the almost 14,000 number is smaller than the almost 8,000 gap between production and sales in the first quarter of 2023. This was something that had Wall Street pretty concerned about last time around with Tesla. That's a big reason why Tesla actually fell last delivery number that we got. I don't think this is going to be a concern this time around, and I'll tell you why. It's simple. You beat estimates, all estimates, by a long shot. Nobody was right. Everyone was bearish. Everyone. And Tesla has produced about 99,000 more cars than it sold over the past few years. And that's about 19 days worth of inventory, but the industry standard for vehicles, legacy automakers, is 30 to 60 days of sales on dealer lots. Barron says, taking all of that information provided in the second quarter report into consideration, it still isn't easy to call what will happen with Tesla stock on Monday. Barron's guess is flat. Dan Ives, I think he has a better perspective on Tesla than most other analysts. He says, quote, he expects the shares to rise ahead of the July 4th holiday in the U.S. Bears were expecting a bad print, he tells Barron's. This was a trophy case quarter for Tesla. He rates Tesla shares a buy and has a $300 price target for Tesla stock. Now we have the first Tesla bear's opinion on this report. This guy has a $150 price target on Tesla. It's Bernstein analyst Tony Sacconaghi. He called results, quote, solid in a Sunday report. It isn't enough to knock him off of his sell rating. He still has his concerns. Despite significant price cuts and quarter-end promotions in Q2, lead times on all Tesla models are low, wrote the analyst. We believe the company drew down backlog in Q2. That means deliveries were greater than orders. Combined with low lead times, he is still worried about demand. This guy is clueless, just like the rest of Wall Street. This bearishness could fuel a short squeeze as well as a potential gamma squeeze. Let me break this down. Tesla does not have a high short interest of free float. Like you will see with typical short squeeze stocks, they have a high short interest. Tesla is not that. Tesla has a short interest of about 3.5%. Anything over 10% is considered high. So it's not a big short percentage. But Tesla has a lot of money that is sold short against them. That's the key. Tesla's never really had a high short interest in a long time. You have to go back to pre-2020 to get a high short interest, anything over 10%. It usually is around, 5 to 2% short interest of free float. But you can see massive short squeeze rallies based off of a low percentage of short interest. And that's because it's all about the dollar amount that is sold short in Tesla. Currently, there is $24 billion worth of short positions on Tesla. And a lot of these shorts were taken out when Tesla was $100 to $150 per share. People thought the worst. People thought Tesla didn't have a CEO anymore, that Elon was more focused on Twitter than Tesla. People thought we were going into an imminent recession. 2023 was going to be a bad year for technology. People thought that demand was cratering for Tesla. None of those things actually materialized. So shorts might not ever see the prices again that they shorted Tesla at. This latest delivery number would support that, especially as Wall Street starts to tip sides here and goes from almost everyone expecting a recession to not as many people expecting a recession. Automakers are hit the hardest during typical recessions. If you start to get an improving economic outlook in which it looks like we're starting to see, this week could be big with some of the economic data that we're getting, that's going to be very much favorable for Tesla. That's going to turn into a tailwind for Tesla. Not to mention Tesla is trading cheaper than Apple, Microsoft, other big tech names. I've said this over and over again, but I think it's very important to drive into everyone's minds. This is why Tesla will go higher. It is cheap compared to other big tech names that are growing far slower than Tesla. Microsoft is projected to grow at 10% a year. Tesla's growing deliveries at 50% for 7 quarters in a row. Who's better there? If Tesla has twice the PE as Microsoft, but it's growing at 5 times the rate of Microsoft, roughly, what's the better investment? That's why you like to use the PEG ratio. And the PEG ratio tells you Tesla is cheaper than any other big tech name besides Amazon. And that's because it's Amazon. So when you think about this logically, you probably see some buying activity from the shorts. Now, the options could actually drive Tesla as well. For anyone that does not know what a gamma squeeze is, let me break it down a little bit. So market makers, their job is to provide liquidity for the markets. 90 to 95% of the time, when you are buying a call or a put, there is not an investor on the backside of that. A lot of the time, there's too much risk to go out and take the back end of a call on a stock like Tesla or a big tech name or anything that could be risky. A lot of people don't want to touch that. It costs a lot of money to do that. So market makers, they provide the liquidity. They are the reason why you can go to any stock that has an option chain and go out and buy options. Because what market makers do is they take the back end. So if you start to win on your option, somebody else would lose on their option. So for an example, if you bought a $300 call on Tesla expiring this Friday, the market makers, they have to deliver you stock at $300 per share. 100 shares per every one option you own. So what do market makers do? Well, when Tesla starts to move higher, market makers, they'll go out and buy 100 shares of Tesla under $300. So they can sell you your 100 shares at $300. So they can still make a little bit of money. That's how it works. That's why a gamma squeeze with options can be such a big driving force. Every one option is worth 100 shares. It's leverage on a massive degree. And the market makers, they're the ones that really fuel a gamma squeeze, or at least the buying behind a gamma squeeze, when you and me buy options. And I think that could have a significant role to play with Tesla. Tesla is consistently one of the top traded option chains in the whole entire market. So what we've seen recently is in between 60 and 80% bullish orders heading into Tesla every single day. This was before this record quarter, this blowout quarter from Tesla. What do you think the options are going to look like coming tomorrow morning? They're going to be extremely bullish. Now, tomorrow's a half day, and you're closed on Tuesday. Does that bullishness continue on Wednesday? Probably. Hard to tell. I think there's going to be a little bit more digestion, and that's where you could get shorts rethinking their positions, or people trying to take on more bullish positions via options in Tesla stock. Now, instead of focusing on the rally that Tesla has seen from the lows in which we really should have never been at in the first place, again, none of the concerns that I previously mentioned ever were true or came to reality. You seen Elon's back at Tesla, better than ever. You didn't see demand destruction, and you're not seeing this terrible economy. At the same time, the Fed's I should put this out here. At the same time, the Fed's no longer raising rates to oblivion. It looks like one or two more rate hikes and then cuts at the beginning of 2024, just a couple months from now. You're not seeing those same negatives, and they really were never negatives. It just affected the share price. So with that thinking in mind, Tesla stock is not even to where it was in August of 2022, when the stock was $315 per share. Should it probably be higher than August 2022 levels? I would argue yes. So if you start to break above 300, and then 315 is going to be a big resistance level, and then 350, if you break 350 with momentum, you're probably breaking all-time highs at that point. Deliveries are at all-time highs. They're breaking records. Tesla's margins can really show up and go up again. Certainly, all-time highs are coming. Could be fueled by a short squeeze as well as a gamma squeeze based on solely expectations going higher. Expectations recently have fallen quite a bit for Tesla. Quite a bit. We covered that in the last video. Dan Ives says, quote, "With this delivery beat, we believe the sum of the parts story for Tesla is another step towards coming into play," the analyst said. Along with this, the newly released supercharger network, OEM deals, energy business, AI-driven autonomous path, unmatched battery ecosystem, and increased production scale/scope globally add to the Tesla golden EV success story. The second quarter delivery number was a massive step in the right direction and is a major positive for the bulls digesting these deliveries. Gene Munster with Deepwater Asset Management also went to Twitter today to write, "This is the fastest growth rate since June of 2021, noting how shares are up 20% since July 2021. 20%, that is it. And you are seeing 50% growth over the past 7 quarters. Yeah, get that. Gene Munster says, most impressive to me, the average growth of deliveries over the previous 7 quarters was 50%, Munster added. This marks a measurable step up in growth. Production growth rates were similar to delivery, suggesting inventory levels remained stable. This could also be a big positive for Tesla. It's the fact, obviously, that the Model 3 and the Model Y, they dominated deliveries. But the Model S and the X deliveries jumped about 80% compared to the 8.43% increase in Model 3 and Model Y sales. So your Model S and Model X deliveries jumped by quite a bit, even though it's only 4.12% of the total delivery number that we just got. You're at 19,000 vehicles. This is up quite a bit from the last report that we seen. And this should be a positive development incrementally for margins. This could probably add a 0.25% or so, maybe a 0.1% to margins. Incrementally positive. Now, this chart puts it into a bit of perspective for everyone watching this video. This is Q2 year-over-year numbers. And you can see as far back as 2012, they were very, very tiny. 12 vehicles were produced in Q2 2012. And then you jump to 5,000. And you continuously moved higher besides Q2 of 2020. And that was obviously COVID related, right? Well, what you've seen from 2021 to 2022 was still a good quarter-over-quarter number, but the Shanghai factory was shut down. So where this number really should have been for Q2 2022, probably 300,000, 320,000 vehicles. Even if you give it, call it 320,000 vehicles, Tesla still grew year over year. Huge, massive. There's no downplaying how big of a jump this truly is. Just look at the chart. It speaks for itself. And the Motley Fool just in with this article. A bull market is coming. One incredible growth stock to buy hand over fist before it soars 684%, according to Wall Street. We'll just read the key points. If you guys want to read this whole entire article, it will be linked down below in the description of this video for easy access. A struggling car market and macroeconomic headwinds have weighed on Tesla's EV business, but the tide is turning. Even in the face of the worst economic conditions in more than a decade, the company has continued to generate growth. Strong secular tailwinds, an industry-leading position, and a recovering car market should help the shares surge even higher. Now, Tesla's energy storage business. This is something that we really haven't talked about much here on the channel, something that I personally watch closely, and I think a lot of you guys do as well. This is growing, like the Motley Fool says, like gangbusters. Yeah, that's literally the word they used. And when you look at the numbers here, they are quite impressive. The energy business percentage of total revenue has increased quarter over quarter. From Q4 2022, which was not that long ago, at 5.4% of Tesla's total revenue. Now in Q1 2023, the latest quarter, at 6.6%. It's increased quarter over quarter every single quarter. And it's likely to do so again. And you just seen, like I said, from Q4 2022 to 2023, a huge increase on a percentage basis, right? Well, you're probably going to get another big increase here as well. Now, the energy business gross margin is only at about 11%. But it's still a profitable business. It's still generating profits for Tesla. Tesla's long-term goal is for that mid-20% range. And some analysts believe this could become a larger business for Tesla than their auto business. In 2022, the energy business revenue for Tesla was almost $4 billion. This is up from $14.5 million in 2015. It is growing like crazy. You're seeing 40% growth rates consistently for the energy storage business. Growth year over year in the last quarter was 148%. If these numbers continue, I think Dan Ives is 100% correct. The valuation of parts that he talks about right here, he says in quotes, the sum of the parts story for Tesla. This is essentially investors giving separate valuations to different parts of the same business. Kind of like Apple. Apple really, its legacy phone business should not be trading at a 36 times forward PE. But when people take into consideration services and what that could do to Apple's bottom line, you can make an argument that if services continues to grow, then maybe Apple as a whole should be valued at that. I'm not going to take that stance, but there's an example. Amazon, people don't care about Amazon. They care about AWS, which is Amazon's cloud licensing business. That's what people care about. That's Dan Ives' point, and I think this will come back in this next quarter to be a much stronger talking point than what it previously has been. That is going to wrap up this video. Let me know what you think Tesla is going to do this week down below in the comment section. If you guys want to support the channel, get yourself free stock with Webull when you sign up using my link in the description of this video. Deposit $1 and get yourself 15 free stocks. Throw a couple free stocks my way. It's a win-win for everyone involved. As well as that, if you guys want to come trade Tesla as well as any other trades that we make in the markets, I send out my alerts every time I make a trade. Link down below in the description of this video, as well as we have a newswire over there and we are adding new things every single week. Look forward to seeing you guys over there. Nonetheless, you guys enjoy the rest of your day or nights, and I will see you in the next one.